Hey everyone, welcome. It is time for Trader Talk in today's market. My name's Brent Moores, and I'm joined by Scott Durfey today. And hey, we're glad to be here. Kevin's out, but we got some interesting stuff to talk about. Nothing like, not to make light of a very serious situation, but nothing like some war to move the markets here. Scott, how are you today?
I'm doing well. We just got back from a market drive as part of the education team. We were just in San Diego, and that broke out. We had 600 and some odd people there when all the news broke out. There's a lot of scuttlebutt going on today
Yeah.
for sure, and there as well. So it'll be interesting to see how this day and subsequent days play out, Brent.
Yeah, it is. You can see the futures markets, and they've
Yeah.
obviously moved, but now we just had the opening bell here, so we'll look at the actual markets here. We're going to do that in just a minute. But before I do that, let me just mention a couple things. One, you can follow Scott or myself on X, or also we're joined in the chat by Scott Thompson. I appreciate Scott Thompson in the chat. As you have questions, feel free to type those in between Scott Durfey and myself. We'll do our best to keep up with the chat. And then, of course, Scott will try and catch anything that we don't get to as well. And you can follow us on X at Brentmore CS, at Scott Durfey CS. And also remember, as we're talking about the markets today, the information today is for general informational purposes only, and it's not an individual recommendation or personalized investment advice. And we'll look at specific securities today, but they're not recommendations. Options carry a high level of risk and are not suitable for all investors. The paper money software application, which is what we will be using today, is for educational purposes only. Schwab does not recommend the use of technical analysis as the sole means of investment research. Past performance does not guarantee future results, and all investing involves risks, including loss of principal. And please note that virtual currency is a digital representation of value that functions as a medium exchange, a unit of account, a store of value, but it does not have legal tender status. All right. Hey, I see some familiar names in the chat. We're glad you're here, everybody. Let me head on over to the Thinkorswim desktop software. And I'm just going to start off with the SPX. Scott, looking at this chart, I had already drawn in, I've had these in for a while here, some potential, well, a channel, I guess. And we've been within this channel for months now. We opening lower today, about 1% lower, but maybe not below about that 6,800 level, which is a level we've been looking at. What are your thoughts on the SPX here, Scott?
Brent, when things geopolitically happen over the weekend like they've happened, we sometimes would expect a pretty volatile move. Now, 1% move on the S&P, that's a move, and it's a move to the downside. There's no question. But the momentum behind the event did not take the price of the S&P below that level of support. And I find that interesting so far. Now, the jury's still out. There's still a lot, obviously, that will and can happen based on the events that are taking place. But I find it interesting that we're maintaining, as of now, that level of support, at least with the S&P.
Yeah, you mentioned something actually just a couple minutes ago. You said, it's not just the initial reaction; it's what's going to happen. And this is a geopolitical event, and I'm no expert at what's going to happen. But we can kind of judge, in a certain sense, how the market's reacting, how the market views what's going to happen in terms of what the market does. It's no surprise that we're down a little bit today, but we still have that support level we've maintained. Of course, we're in a zone, and we're near the bottom part of that zone. We'll see where that holds through the rest of the day. We figured we're probably going to open lower. You can always tell, by the way, if you're interested and you're looking pre-market, you can bring up the future. Now, we're not talking about trading the future here, everybody, but this is just a way of kind of getting a sense for where the market may open. And of course, we were down, but actually we're off our lows here on that future. Going back to the S&P 500, the SPX, you can look at different time frames, and we can even look intraday on this. let me just pull up a 5-day, 5-minute. I'm going to zoom in a little bit, and you can see where we're at here on this. And so far, yeah, expected move down, but the day's been, we're 5 minutes into the market day, but we're near the high of the day here of that. So that's the S&P 500. Any other thoughts on the S&P 500 here, Scott?
No, only that this will be one that traders and investors will be watching closely among some of the other indexes. But being such a widely diversified index,
Yes.
this is one that traders and investors will be paying particular attention to in the coming days and weeks as this thing transpires. So
Yeah.
It'll be wise to keep an eye on this.
No doubt on that. And we can always look at the equal weight as well. And this is the equal weight. So this isn't giving extra weight to those big mega cap companies or, all 500 are equal weight. You see a very different chart here. We have a nice trend up. That's a 20-day moving average that has been just kind of moving right along. Again, sell off today, about the same, about 1%, but not breaking the trend. So far, the market reaction. Now, we'll look at individual components of the market that are going to have bigger moves today, some to the upside, some to the downside, perhaps. But the market as a whole, fairly consistent and not as big a move as maybe some people would potentially think there would be there on that. Let's take a look at the NASDAQ here. Here's the NASDAQ. If I were to draw a support line in here, I probably would go down to about the 24,500 level of where we've kind of bounced off of late on this. And again, looking kind of similar, not the same channel, but in terms of today's action, Scott, we're near the high of the day, and we haven't broken that support level. Any thoughts on the NASDAQ here?
I don't know if you can zoom in just a little bit more, maybe on the last, I don't know, since February. Yeah, that's fine right there. We'll see how this plays out. But if today we don't go any lower, we may actually have a higher low today. Which it probably isn't going to speak a lot to the market. But it's interesting how not everything is just falling through the floor. Which some, based on anecdotally, some of the investors and traders that I was able to talk to in San Diego over the weekend, that was the fear for a lot of people, and unfounded, certainly, but the fear nonetheless. And so we're seeing that happen as well. I don't know that it'll hold out. It'll be interesting to compare it to the other indexes as well as we go through this. But that is an observation that I had right off the bat there, Brent.
Yeah, we'll have to see. Let me quickly go to the Russell 2000, but then I want to look at the VIX because one of the things that maybe explains why maybe the drop isn't quite as big as what some people may have expected is perhaps there was some anticipation in the sense of, for the last couple of weeks, I don't know about you, but I've been hearing a lot of speculation, a lot of chatter of, hey, is there going to be a military conflict here? And the market, well, it's kind of sold off a little bit. The Russell 2000 down maybe a little less than the others, but it's a drop right below the 50-day moving average. We're kind of right at that 50-day moving average on small caps there, but kind of a similar type thing. I don't know. I mean, I guess if I were to look at this before today, I'd probably say we were probably looking at something kind of like this.
Yeah.
I'll be interested to see if we recover that 50-day, recover our support line there by the end of the day there, Scott.
Yeah, I agree with that. And if you look, sometimes we talk about looking left to confirm right. If you look back to December, the highs in right around December 8 to 15, they correlate quite closely to that level that we're seeing, that potential level of support there as well. So, we do have a couple of built-in kind of things here that we should be paying attention to, because if we break below that on the Russell, then that will be more meaningful to the downside than if we just bounce off of it.
Yeah. Yep. I agree on that. So there's small caps, and again, you can, on any of these charts, if you're interested, you can always pull up an intraday chart on these. And one thing, let me just get rid of these these lines real quick. But, well, actually, no, I don't want to do that. Here's the previous support line we talked about. This was the one going back a month or two as a support. But you could also add on pivot points, which is kind of an intraday. I'm going to zoom in just a little bit so you can see it a little better. An intraday, well, indicator that's often used intraday, and it can be used to kind of help give you intraday support levels. That intraday, this would be, here's our pivot point. So this would be an S2 level, which corresponds pretty closely to the level we were looking at. Maybe a little bit hard to see. Let me zoom in a little bit more. A little bit hard to see there, but that's right there. There's a kind of a key support level. This S1 level, we're below that right now. Potential resistance level, we'll see if we can break above that, stay above that for the day there on that. So in the chat, Bill said, give the market an hour to settle. Yeah, I mean, on any day, you usually have more volatility when the market opens. In fact, Scott, sometimes people say, talking about trading the market, they avoid the first 20 minutes, half hour for volatility reasons.
Yeah, not to put words in Kevin's mouth, but I heard him refer to that just Saturday as amateur hour.
Yeah, amateur hour, yep.
Yeah, you'll often hear that referred to as that, and for that reason. So Bill's 100% accurate. Give the market at least an hour to settle today, and maybe even more depending on, again, the volatility that we're seeing in the market.
Yeah. So here's the VIX chart. Your thoughts on the VIX here, Scott? What do you say on the VIX?
Well, this is fully what I would have expected to see today on the VIX. We're seeing the VIX right up, as high as 25, 24 today so far. Pretty high compared to where it has been in the past. A lot of option traders will see that as a opportunity. When we see volatility increase like that, we see option traders and others see this as opportunity, not just a fear index and a reason to run and hide. Now, again, remember, options are not suitable for all traders. So you got to remember that, know that, etc. But that's something that comes to light for me, Brent.
Yeah, and we've had this run up in the VIX. I'm not going to say it's all due to the Iran, conflict situation and speculation, but I think a significant part of it has been, this isn't a complete shocker to many people what's developed here, I don't think, and so we've seen this rise up here, the VIX. It is, people call it kind of a fear gauge. But one thing about the VIX, we can see it here. We can see it here. It spikes up. And I can't guarantee what the future is going to hold here. But the common thing we always say about the VIX, Scott, is it's mean reverting. And whatever it is, it goes up. In the past, it's typically, it hasn't remained high for a very long period of time.
And you're illustrating that quite well with just those. Where you have your circles, that's a representation of 2 days on the left, 4 days, which just seems like a long time in a VIX cycle. There in the middle, and then on the far right there, we'll see how long this one happens. But you're seeing some patterns there for sure.
Yeah, and if you're like, just to maybe further illustrate this, let me go back. I'm going to go back. I want to go back to COVID. Let me do this, and I'll just do a weekly. This is going to be a weekly chart here. And so you can see the spike on COVID. So each of these days, let me zoom in here. So this was when COVID occurred. This is weak, climbing, spike, climbing. It goes down. This is about as long as you typically see the VIX stay super elevated, and this was a very elevated time period. And then there was still a little of uncertainty. I mean, this was like we were all quarantined and whatnot during this time period, back down to the low 20s level. And so, as you look at these levels here, unless the conflict turns into something a lot more than I think most people are expecting, we're unlikely to stay up mid 20s for very long here on that, I guess, would be the deal there on that. Okay. So that's the VIX. And for those of you, just a comment in the chat from Jay Richardson. I appreciate it. When I was a newbie, I would freak out on days like today. Now I'm just watching. Progress is a good thing. I love that comment. That is a great comment because I think that describes everybody almost. Scott, I'll tell you what, when I was a newer trader, it wasn't necessarily war, it was, economic uncertainty, reports, whatever, news. It would really concern me. And it doesn't mean we can't take action in the market or reevaluate things, but overreaction is not ever helpful there, Scott.
Yeah, overreaction can be the death of a trader. There's no question. Yeah, think about that. And I won't go on and on about this, but when we overreact, we're looking for things to make fit that won't fit, and etc. Or we're viewing things as more important than they potentially are. Again, I love some of the comments that we're seeing. You made a comment. Jay Richardson says, "Now I just watch." There's some wisdom in that. There's a lot of wisdom in just kind of sitting back, taking it all in before making any rash decisions, for sure, and letting things settle. We've got a lot of dust here that needs to settle.
Yeah, there's nothing wrong with sitting aside for a little bit until you can get a better grip on what things happen. Because what often happens is this is an oil chart, but let me go back to it in one sec. And this market reaction wasn't drastic or whatever, but sometimes you get these big tails, these big spikes down, and then people will go, they panic and they sell out at right at the very bottom, and then the market recovers. The market kind of gains back there. That you get a big candle and people end up selling out at the very bottom, and then the world's not coming to an end, and they end up selling at the wrong time there. So emotions, fear, greed often are almost always are a hindrance rather than a help here. This is oil. Not a surprise. I was looking at oil futures last night on this, Scott. And spike up, but again, hey, look at what oil has been doing in no small part to tensions between the US and Iran over the past few weeks. So most of the move, if we take the low and go to the very high, most of that move has already been made, was already made before that occurred. And now we're actually back. I mean, we're up today. We're up 6% today. But that's, again, market settling down a little bit, huh?
Yeah, definitely. And if not settling down, at least developing some normalcy in what's happening. Again, as we see time progress this morning, and the amateur hour, as we just called it, as that kind of comes to an end or begins to dissipate a little bit, yeah, we'll probably see more of this. Typically, this happens. Typically, when we see events like this, we will see a spike overnight. And then we'll see it kind of settle, at least in the early part of the event or early part following the event. So we'll see if that continues to happen. But it appears, Brent, as though it's going to.
Yeah, again, just to reiterate, we don't know what the future holds for this, but it's not a surprise. Now, commodities often, and oil in particular, has a way of jumping up significantly with geopolitical events. That's different than, notice this is completely different than the rest of the market. When there's global, concern or something, generally markets, most stocks go down. Commodities often go up, and that's what we're seeing right here. But let's take a look at gold. How about? How's the my initial reaction is, well, gold is probably going to spike up because when there's uncertainty, people jump to gold. Well, people have been going to gold for the last 2-3 years, Scott, it seems, in a big way. Yeah, we're up 2% today, but 2% isn't huge. I mean, look at the candle. We've had much bigger days here on this. So kind of the same story above the 20-day, above the 50-day on gold. Flight to safety asset, but again, nothing super out of the ordinary today.
When we talk about a flight to safety asset, and we have an event like we have had over the weekend, and we would assume that there would be a big flight to safety. Honestly, Brent, I'm surprised that I'm not seeing a bigger candlestick right there for gold, just based on the flight to safety analysis, But now you mentioned that gold's kind of been on a rip lately. You didn't use that terminology, I did, but that's but it has been, and so have some of the other precious metals. But as they've gone up, I'm wondering how much of that is kind of an over appreciation of some of these precious metals, and then when the flight to safety necessity comes about, I wonder if we're thinking, okay, we've been going up so high already, and maybe some of that's already baked into the price of the gold.
Totally agree. I think a lot of that is partially baked in. I mean, and this run up most recently, now we've had a run up for a long period of time, but if anything, it's gotten a little steeper the last couple of weeks. Sure. Kind of an ascending triangle type pattern here. Well, we'll see if we come down from this there. And, a lot of times people will take a pattern like this and say, well, that's kind of bullish, but we're going to wait and see if we break out. And then that would be, some traders will take action on this. But, regardless of any war situation, long before that was an issue, gold had been going up because there's a lot of other concerns other than just war that can affect the price of gold. Concern about the dollar, concern about just general, the dollar, the status of dollar in terms of worldwide currencies, how attractive the dollar is for people to buy U.S. bonds, how much are other foreign governments going to hold the U.S. dollar, and also just the strength of the U.S. economy, and interest rates can factor in the dollar as well. But these can all affect the price of gold here. And you mentioned other precious metals as well. We can look at silver, down today, interestingly. Thoughts on silver here, Scott?
Again, and probably I would add even more emphasis to the fact that silver just really took some would argue, even an overpriced situation on silver as it just continued to go up. Almost traded much like a meme stock in the past. So as we've seen that, and there have been a lot of people who have argued, that it is overpriced, that it needs to correct, etc. So when we seeing silver pull back a little bit today, I think that that has more to do with what has happened recently in terms of the price of the silver itself than the external events that are happening globally right now. But it still will and can have some correlation to what's happening. So not something that we should ignore, not something that we can just walk past, definitely something to pay attention to. Again, however, I think the silver's been a little bit overpriced according to what we're seeing here. And maybe the reaction has been somewhat muted because of that.
Yeah, and we can kind of see that. I mean, silver kind of has done what gold did in a sense, but even more so when it went up. At least more recently, when it went up over the past several months, it went up more than gold did over that period of time. When it fell, we just dropped 47% from high to low here, basically, from the very high to the very low. We're kind of making our way back up, but again, today, silver is down a little bit. Just one more reminder to everybody: we're looking at these asset classes. These are futures, but we're not talking about trading the futures. We're just looking at the price. Another one we're going to look at here, and because I was very curious, I was genuinely curious when news of the war broke out, Scott, how these would react, because I knew these would be kind of the big things that would react probably, and one of them I was curious about was Bitcoin as well. And just a reminder, digital currencies such as Bitcoin are highly volatile and not backed by any central bank or government. Digital currencies lack many of the regulations and consumer protections that legal tender currencies and regulated securities have. Due to a high level of risk, investors should view digital currencies as a purely speculative instrument. But Bitcoin has been not having a great, how long? It's 6 months here, Scott. What are your thoughts on Bitcoin here today? Up about 2%.
Yeah, interesting asset class right now. Can you show us a minute chart maybe a 1 day, 1 minute chart on this one, Brent. And this is, I find this interesting. Even look at the volatility even after hours on Bitcoin.
Yeah.
Yeah, again, I'm waiting for Bitcoin to kind of get settled in the economy, in the way things go. It's really difficult for me, and I know there are other people like you and others who have a little bit better handle on the volatility and the way the Bitcoin works. But it's a little bit difficult to really anticipate what may be happening here. Not surprised to see what's going on. Again, some may see it as a flight to safety. I'm not deeming it that, but some may see it that as that. And so again, depending on the way you view this asset class and its opportunities, it may, or it may not have the opportunities attached to it. And like you said, Brent, this is a currency that is not regulated by any government or anything like that. Because of that, volatility can really come into play here.
Yeah, certainly it's been a rough time for Bitcoin, and it's just a reminder, when you have a portfolio, and I can't talk about, specific portfolio allocation and how it should be for you, but a lot of times, if you go to your financial advisor or something like that, they'll show you this pie chart or something like that. And on that pie chart, they'll have different, segments of it. And, so you may have U.S. equities as a segment. You may have bonds as a segment. You may have crypto as a segment. Usually, that crypto segment is probably going to be one of the smaller ones because of the volatility that we're looking at. You may have gold as a segment, and sometimes one segment goes up well, and the others don't do so well. So the point is, having these different pieces of the pie give you different correlations in your portfolio, so that when part of your portfolio drops, not everything is dropping. And that's one of the kind of nice things about commodities here that we've seen this illustrated, is commodities have had their day for the most part, and been doing really well lately. And so that's helped boost a bunch of portfolios when a lot of, say, these mega cap stocks aren't doing so hot. And I want to talk to some individual sectors in the economy here in just a sec. Scott, anything else you want to talk about in terms of indices here? Are there any other indices to look at here you want to look at?
No, I think we're okay to move on, Brent.
Yeah. All right. So here's what I want to point out. Number one, if you want to see how's the market, how are different sectors doing today, you can go up here and you can pull up a public, this is a public watch list, S&P 500 sector indices. And you can just put in a percentage change column. This is today's change. Probably not a shocker, energy is up today, about 1.6%. Everything else is down a little bit. We've already seen the overall market. Energy not only is up today, this is a 1 month return. You can see it's the top performing sector, close to utilities, is just below that, over the last month. So again, energy, which is kind of a smaller sector, has really had a good run. Today's helping the situation, but you can see where the individual sectors are. But we can take this a step further. We can go and we can look at, we can break it down further from these sectors. So I'm going to use a different watch list. In fact, let me just kind of show these watch lists real quick. If you go to public, go down to S&P 500. This was the one I was just looking at, sector indices. But if you go to sectors and industries, very similar name, then what you get is it broken down. And just put a description column in. You can add that by clicking on the gear there. Otherwise, you're just looking at the symbol, and that symbol isn't going to do much for you there, huh? So we're going to look here, and I'm just going to sort these by today and see what's doing well and what's not. Oil and gas, not a shocker there. But, you can look and you can see some others that, aerospace and defense, Okay. Well, probably not a surprise. Aerospace and defense are doing fairly well here today. So you can look at individual companies there on that. And if you want, by the way, you can pull up a watch list. Let me just shrink this down. Pull up a watch list and look at aerospace and defense or in industrials. And I can go and I can look at these companies. I can look at some of these companies here. And you'll probably recognize them. You can also, if you want to narrow it down, you can add in a column like a market cap column. I'm going to do that here just to show you how to do this. Market cap. Let me just remove a couple columns here just to make up some space here for us. I can sort that by market cap. And I can see, oh, General Electric, how are they doing today? Well, they're actually down a little bit today, maybe a little bit surprising. And this is Raytheon, up 3.5% today. Probably not a shocker. Boeing is not moving as much today, but some of these like Lockheed Martin, probably not a surprise. That's a big defense contractor. Northrop Grumman, big move up, 4.5%. I've seen multiple articles this weekend about the levels, and here's General Dynamics, up a little less than the others. But these are munitions and weapons manufacturers, and I've seen numerous articles, Scott, about is the U.S. going to need to start producing more munitions? So it's not a surprise that these have gone up. Any thoughts on this kind of line here, Scott?
No, only that sometimes, we may not really see, depending on how this whole thing matures or doesn't mature, can be impactful on how the companies that you just pointed out initially react, which we're seeing, and then continue to react, which is yet to come, and then finally react, which is even further down the road. So again, I don't know that there's a crystal ball that can allow us to look into the future far enough to make super accurate decisions on how this is going to go long term. But initially, these are definitely the things that we should be watching for, Brent.
Yeah, and so that's a great point. This isn't who knows what's going to happen necessarily in the future, but I guess what my broader point is there's going to be times in the market where something happens. Something has happened, and you're going to want to be able to go, oh, I want to find those particular stocks that are reacting. There's a couple ways. Look at the sector, look at the industry group. Or maybe you're just like kind of have a thought, you read an article, we're short on munitions, we're going to need to do more. Therefore, I want to find those stocks. You can find those stocks. I kind of use watch list here to do this, but you can also go to a scan and you can do, let me just reset this real quick. You can go to a watch list and do a similar thing. But you can go and say, well, I just want to look in S&P 500 stocks that are in the a particular industry, staples, beverages, or whatever. It doesn't matter. I'll stick with our theme here, industrials, aerospace, and defense. And then I've narrowed it down not just to aerospace and defense, but also only ones that are large cap companies. Because sometimes you pull up a particular industry group and you end up with a bazillion little like penny stocks and stuff, which you likely don't want to look at. But then you can run that scan. There you go. There's your S&P 500 aerospace and defense companies. And if you want this as a particular watch list for the future, you just save it. You just go up here, click on Save Scan Query, name it, and then it will automatically show up as one of your watch lists there. Okay. So there we go. That's, I wanted to show you. Now, these aren't obviously the only companies that are moving today. We have upgrades, we have downgrades. Here's a company that had an upgrade, and this is going to be CrowdStrike. CRWD, CrowdStrike. This is cybersecurity company, up 2% today. Piper Sandler upgraded CrowdStrike to overweight from neutral with an unchanged price target of $520. That would put it up there. Now that's a nice upgrade for them after not so great a year. I mean, that's a pretty significant downtrend there, Scott.
Yeah, you know what, and I'd be waiting to see even more news. This is great that CrowdStrike's been upgraded, but if you look back there from the high of 56 or 566.90 back in whenever that was, November-ish, you can see that we have had a pretty serious series of lower highs and lower lows, and in order for CrowdStrike to really recover the kind of momentum I think that traders and investors would like to see CrowdStrike recover into, we would need to see continue to see a series of higher highs and higher lows. So initially we may be off to the run on that, but we'll have to wait and see as that plays out. So yeah, great that it's been upgraded. A little apprehensive to make any kind of decisions on it until we begin to see more speak from the chart itself on momentum, demand, supply, etc.
Yes, and we do have earnings tomorrow on CrowdStrike, so that can be another I don't know, impetus for a movement here. But I think to your point here, you can't get too excited about this little move here, because look what happened there, or there, or there, right? Because when you're trending down or trending up, for that matter, it's gonna go up and down along the way. It's when we break out of the series, out of the norm of what we've seen, that's where it becomes significant. And so maybe you're looking for a break above a previous high. That would probably be very significant at that point. Break above moving averages. Yeah, that's maybe a little less because, we did break a moving average here, but it's probably significant. Break above the 50-day would probably be more significant than the 20-day because that's one that hasn't been broken before. So these are all things that you may look at on this for CrowdStrike. But point is, we got earnings. We're not in a real active earnings season right now, but we do have some companies coming out with earnings this week, and CrowdStrike is not the only one. Here's a company that you guys may be familiar with. Target has earnings tomorrow on this. Trend's been going up, a little bit of a pullback. Who knows? I mean, everything can change with earnings. Trend, support resistance, whatever can change with earnings. But so, we'll keep an eye on that. But in general, Target has been trending. Target, like if you compare Target, Scott, to Walmart over the past few years, Walmart's been eating their lunch, but Target lately has been doing pretty well.
Yeah, interesting how that's worked out too. I think some traders and investors would have potentially anticipated that. The Target's a pretty good company. Anecdotally, obviously, we have different opinions based on the things that we're looking at for these different companies. But if you run Walmart and Target next to each other, you're right. In the past, Walmart just absolutely annihilated Target.
Yeah,
Target's starting to show some strength now, and traders and investors are liking what they see in terms of that as well, Brent.
Yeah, that's a 5-year chart of Target, by the way, right there. So you can see we've had a nice little run recently, but over the last 5 years, not so great. Yep. Here's a 5-year chart of Walmart there. So just to compare the two. Okay, let's go a few more that have earnings. I'll probably go a little bit more quickly. Although let's do a couple we'll look at a couple that had earnings today, but others that have them this week. And I'm going to go back to a shorter term chart here. Ross Stores, nice trend, staying above that 20-day. Looking fairly strong on Ross Stores there, Scott.
Yeah, Ross Stores again. This is a company that kind of amazes me sometimes, Brent. I don't know if you've ever been in a Ross stores. I went
I
in
have
one.
actually.
I went in one recently. We have one just up the street here in Orem, Utah, and I looking around and I'm like, really? This is a place that can trade for $206 a share. So it just doesn't have that. But the appeal to people in at Ross stores is the discount advantage that we get
Yes.
there, and their
Yes.
quality clothing and various things that are there as well. So when we see things like this happen, there's sometimes great reason for that. We're in a situation in our economy where this is probably a different kind of subset to what we've been talking about. But again, people are interested in saving money, being more cautious, more prudent with their spending, etc. So when we see things like this happen, that and it's in a company that's being run well. This kind of stuff is not all that surprising. But the people who are trading Ross stores right now are liking it.
Yeah, absolutely. Let's hit up a couple quick stocks here that have had earnings released. I'll pull up Berkshire. They released earnings today, this morning, I think, and down almost 4% today. So that's a little bit of a rough go here today, reaction here. And here's Norwegian Cruise Lines, down about 10% today on that. So that's starting off your earnings week. We are running out of time here, and I want to just hit up a few stocks in the news before we finish up here. Microsoft, little company you may have heard of there, Scott. They're up about 1.5%. Microsoft is weighing releasing its long-rumored E7 Enterprise Productive Software Bundle, a more expensive AI-loaded version of Microsoft 365. So that's a Business Insider reports that, and it seems to be bucking the trend of the overall market today, up 1.5% on that news. Microsoft's had, this is a big company, one of the biggest in the world, and this probably hasn't been helping the performance of the S&P 500 of late, but this just kind of shows the difference. Some of those smaller companies, smaller sectors have been keeping the S&P 500 in that channel we've talked about, whereas some of the larger caps have fallen down, such as Microsoft.
Yeah, and market rotation, sector rotations, industry rotations. You're seeing that at work here. So nothing new about what's happening. We'll continue to watch it.
Yep. Let's look at one more, and then I just want to finish up with a final look at the markets just to see where we've come over the last 45 minutes. NVIDIA is up about 2% today as well. Again, it's not the downward Microsoft chart, but more of a channel sideways of late here, I guess, on NVIDIA. And but nice little bounce today. NVIDIA intends to reveal a new processor meant to help OpenAI and other customers build more efficient tools, the Wall Street Journal reports. It also announced a commitment together with several companies to build the world's next generation of wireless networks on AI native open secure platforms. So some news out on NVIDIA. The market seems to like it, up 2% here today. And to finish up here, Scott, let's just take a peek back at the charts here. Well, we're down just a smidge, Scott, on the charts, down 0.18% on the S&P 500.
Yeah, interesting that's the case. You did mention earlier, Brent, and I obviously very astute observation that when we start these things, sometimes the first hour is amateur hour.
Yeah.
So here we're seeing that.
So some settling down in the markets. Hopefully, everybody, I don't know where the market's going to go. Scott, I don't think you know exactly where the market's going to go either. But one thing we do know is taking a more level-headed approach on things and not getting panicky usually is beneficial. So there you go. Hey, Scott, where do people normally see you?
Yeah, so we will be in Atlanta, not next weekend, but the weekend after. We'll be doing a technical analysis class and an options class there Friday and Saturday. Go find the live events under the coaching tab on the Schwab Network. You can see where the live events will be taking place across the country at any given time. Make sure you sign up and come see us.
Awesome. Thanks, Scott. Thanks for joining me today. And I want to thank Scott Thompson in the chat as well for helping me out there. I always appreciate Scott. And I want to thank each of you for taking some time out of your day and joining us. And just a reminder, coming up at 11 o'clock Eastern time, we have a Straddles and Strangles class you can join. Follow us on X at Scott Durfey CS, at Brent Moore CS, and everybody have a wonderful week ahead. Bye-bye, everybody.